Hey traders, Raghee here. And what did the CPI number have to say about the markets? Well, if you take a look at the CPI number, it just barely took a tick higher. So this just convinces the markets broadly that the Federal Reserve's narrative about inflation being transitory is probably going to work. I think that's going to be something the market is going to buy into quite figuratively and literally, and you can see the action on the S&P as we are testing this resistance level. Now, please don't assume that a break of this is just instantly going to mean higher highs. We continue to look for pit bull low opportunities. I do believe, and I believe we talked about this in yesterday's update, that yesterday's sell-off into the close was actually our pit bull low getting put in on Wednesday. And I have a slightly less regimented view of the pit bull low day. I think it really gets put in anywhere between Wednesday and Friday, the week before options expiration. So really nice follow through after that pit bull low was put in. And there's a number of places that still have not taken off. So the question is, if a high tide lifts all boats, which boats are now going to get in gear? Now, the first place I think a lot of traders are going to be looking for is the NASDAQ. Is the NASDAQ now going to start to play a little bit of catch up from the still choppy market that it's in? And probably, basically, market participants love tech stocks, the volatility, the high beta, high momentum names. That's fine, and clearly there's going to be opportunity, but more specifically, I would focus on something like XLC. All right. Better structure than the broader NASDAQ led by Facebook and Google. But the places that I'm getting quite opportunistic on would be places like XLI, already long XLP, and XLB. All right. So again, if the high tide is going to lift all boats, and I don't expect it just to be up and away from here, where are the uptrends? They're not in the Qs. They're not in the NASDAQ futures. They're really more tethered to the narrative around the S&P, mostly the financials, which, by the way, I love the financials. Yes, they're down on a generally sort of up day, but remember, we're inside the 6-week window to earnings. This is one of the best uptrends in the market. Look at what is going to cycle up, almost like a Ferris wheel, to being the bullish markets going forward. What are going to be the opportunities for buys as not the buy everything market starts to come back into focus. I'm not talking about that. What I'm talking about is if the S&P moves higher, it will take the financials with it. It'll take healthcare with it. But what's lagging a little bit and what has a certain inevitability of following this path higher, be cautious. Take advantage of these dips on this pit bull low week going into triple witching next week, next Friday. But don't chase the markets that are already making higher highs. Ask yourself what is going to then follow these higher highs, what is going to follow the rising tide. I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me